that time, 2005, we start looking at real estate from a consumption asset. It started being recognized as a very distinct asset class. Financial tools came up. The financialization of an asset is in many ways founded on the underlying valuation methodologies. And so that's the first step. Coming back to art now, the uniqueness of some of these, and I'll go back to the basics, because unlike a stock market where every share is identical, here everything is unique. Okay, and more so interestingly, sometimes what happens is that if there's a change in price or increase in price, a change in price, the equilibrium sometimes is restored with a supply side enhancement, right? And that's the case with any commodity. अगर दाल के दाम बढ़ रहे हैं, commodity के दाम बढ़ रहे हैं, share के दाम बढ़ रहे हैं, supply will increase and the equilibrium will be restored. But in art, not always so, because and that's the irony, most of the art actually enhances after the artist has died. So now you can't get the artist back. So that supply side enhancement doesn't happen very often. The markets are sometimes premised on the principles of free trade, right? But art, on the other hand, is premised on monopolistic trade. If you own a piece of art, only you own it. You don't want to give it away. So the elements of free trade are missing. Holding period, enormous. On an average, I'm told people hold art for about 28 years. I'm guessing that once you have pricing methodologies, there's more awareness, the holding period will come down. But generally, you see, you don't own art to flip art. When I say illiquid means you do not have the right benchmarks to sell it, and the market is relatively much smaller. Now, let me tell you how small this market is. Even on this small market, and I think these are numbers that I'm getting from Rishi, there is about 2,000 crores of art traded annually. So number one, art is not reported. Okay, most people don't sell. When it's, even when it's traded, it must be traded in cash or in private circles because it's a very private affair. People don't want to report it and all that. But even when whatever is reported is 2,000 crores annually. So if you apply the same number, it's a multiple of 50 basically to assume, right Rishi? To assume what's the total size of art, it comes to about 1 lakh crore of artwork is existing today. That is on a 2,000 crore annual traded number. So you can see how much the depth can be. I'm just going to throw some of the numbers because sometimes, the data attracts people. So in India, the highest painting that was sold was about 42 crores. And they have a per square feet kind of a categorization also. So the highest that was paid for a painting, that was about 8.04 crores on a per square feet basis. Now you might think that is huge, right? Now, compared to this in China, the highest painting that was sold was 142 crores. And a per square feet rate was about 27 crores. And this is a fraction of where global art is, because in the US, highest painting that was sold for about 3,000 crore with a per square feet painting, on a per square feet basis, translating to about 909 crores. It is some of these aspects which make art a very unique proposition. And in many ways, I believe once we start understanding art, valuation methodologies are clear, very soon the financialization of art will start. I've been speaking with Rishi. I came to inaugurate Yusufji's art show here a few days back. I saw the beautiful art. I met these people. My tryst with art actually started only about last year when I was doing up my office. When I realized that to appreciate art, you don't just need deep taste, but also very deep pockets. But when I started speaking with Rishi and everyone, I realized that how underinformed can people be? A large promoter is looking at his house as a 100 crore property and all that, and he's very proud of it. And he went to speak with him, and under his bed, he is having Razak and some of the best paintings, which can be much more than the entire value of the house. So people don't realize, what is the true value of art? Because I think it's a very under-penetrated sector, which is not fully, in fact, not even unleashed a fraction of where it can be. Taj Hotels, for instance, and most of these companies, most of these hotels and all of them, the huge Hussain that you see in Taj Bombay doesn't even form a part of your balance sheet. And in fact, going back, and that's why I keep on saying it's very similar to real estate, because at one point in time, a lot of real estate companies didn't want to list themselves because they felt that the underlying real estate valuation is not reflected in the stock price. And I think that's the same problem in art, because people don't understand real estate. And I think it's about time that people start understanding art. I think the idea for today's session, I thought, is to speak less, although In many ways, I believe that, when lawyers speak, it's philanthropy, because what else can we sell except our time and our speech? We thought that, we'll keep it very commercial. I'll let Rishi speak. He's an encyclopedia. In fact, if he speaks, I don't think there's any... Not only can I not speak in between, I may not even have anything left to speak. So with that short, crisp intro. Okay, but maybe you can... Okay.
Good evening, ladies and gentlemen. I'm Prashant Das. I'm a student of finance at IIMA-Aura. And that is all I am. I dabble in art. I do some oil paint once in a while. And we do research for a living as academics. And every project that we pick up is very exciting to us. But some projects become much more exciting when we get to partner with, as Ruchir rightly pointed out, the encyclopedia of art, as Mr. Rishiraj Sethi. So without much ado, I will start with the presentation. I guess I can still control, and I guess you can see my slide. Yeah. Okay. So Ruchir built a very strong background for our seminar today. And he talked about the nature of art as an asset class. For a long time, people have believed that art is something that we acquire to consume. But in recent decades, we have realized that art is actually not only something to be consumed, but also an asset class to be invested in. This is an asset class that gives you certain utility, the aesthetic utility. On the top of that, it is also an asset class that allows you to serve itself as a store of value and as a medium of transaction. But this asset class has some very unique characteristics. For example, unlike stocks or bonds, you don't earn any dividends. You don't earn any income from owning these assets. And hence, majority of the source of wealth creation comes from price appreciation, from capital gains. On the top of that, this asset class trades in very illiquid market. So just possessing a valuable piece of art doesn't mean that you will be able to convert it into liquid cash as easily as you could do with other liquid and perhaps rather boring asset classes like stocks, bonds, or derivatives. And because this asset class is very illiquid, this is also very opaque. The market is very opaque. And the price discovery happens at limited locations, mostly in auction houses. One reason why this market is illiquid and why the whole mechanism is opaque is because this asset class is highly heterogeneous. Pick any two stocks of TCS and they will be exactly alike, identical to each other. Pick two paintings from the same painter. Despite having the same subject, they will not be the same. And hence, they will be priced very differently. So as a student of finance, I focus on illiquid assets. I specialize in real estate assets. And we realize that the nature of artwork as an asset class is very similar to real estate assets. I mean, pick any residential tower, focus on one particular floor, focus on two flats with exactly the same floor plate. And you will see their prices will still be different because real estate is as heterogeneous as perhaps art as an asset class is. And as a result, while we lean on very standard pricing model for liquid assets, like a dividend discount method or capital asset pricing method for stocks and bonds, that task becomes often very impractical when it comes to pricing artwork. And hence, we don't have any standard pricing models available to price art. Despite that, you will see, despite all the challenges, the art market in India has taken an exponential path. So on the x-axis here, you see timeline, years. On the y-axis, you see the total transaction of artwork produced by artists of Indian origin. And please note that this statistic is limited to top 25 artists only. So this is not the complete picture. In recent decade, nearly $500 million worth of artwork, US dollar worth of artwork has been transacted that relates to artists of Indian origin. And in recent years, every year, these 25 artists alone represent around $75 million worth of art being transacted in various auction houses. My guess would be that the total artwork should still be around $100 million, and it's still a very small part of the total potential that we expect from this asset class. So this is not Pete Mondrian or a cubist work by Pablo Picasso. This is a statistical graphic. The color bands that you see represent the share of one of the 25 artists that we are analyzing in the auction market by the count of artworks being auctioned. So x-axis here is time. And if you fix time, let's say we are looking at 2009, then cut across vertically, draw a line, and the width of each line in each color band shows you the percent representation of one particular artist's artwork being auctioned across auction houses. The black bars that you see here is a measure of concentration. We call it Herfindahl index. The more the artwork transacted are concentrated on fewer number of artists, the Herfindahl index will be higher. And as you can see here, over time, at least in last 15 years, the taste of the taste among consumers for Indian artists' paintings has perhaps become very diversified. It's not that we only focus on top few artists, but in general, the market has democratized for a larger number of artists. And an increasing number of artists are claiming their space when it comes to the number of artwork being transacted in auction houses. All that being said, for a very, very long time, economists have had a very funny view on art. So there was a paper published in American Economic Review in 1986. And the author said that art prices wander aimlessly and unpredictably. When you talk to a layman on the street, that person will have a very similar view on art prices in India also, because most people think of art transaction as something not totally random. People who are buying or selling artwork may have other motives beyond consumption or beyond a smooth, plain motivation for generating capital gains. That is not true at all. That is what we realize after conducting our analysis. So my friend Rishiraj Sethi was quoted in Economic Times around 15 years ago, and he had predicted that very soon artwork would make its place to the walls of upper middle class households in India. And to a great extent, you see that the prediction was rather accurate. So what is it that people are paying for when they're paying for an artwork? The public perception would say it's about conspicuous consumption. This theory came around 150 years ago. It said that, when you buy a Ferrari, when you buy a Mercedes or BMW, it's not because you are enjoying riding it, but because you use these investments as a signal to the rest of the world that you are wealthy. This is called conspicuous consumption. Many people believe that, people invest in art simply because they want to show off. Now, is conspicuous consumption an illegitimate need for human being? Not really. Everyone is looking for attention. I'm an academic. I'm looking for attention. When all of you are sitting here in the hall, it gives me some degree of gratification. I just don't have the kind of money, right? So those who have the money may have a legitimate motivation to show off their wealth by investing in assets that are supposed to be premium assets. Nothing wrong with that. But theory that people invest in artwork only because of speakers' consumption, at best, is controversial and perhaps quite inaccurate representation of reality. Some people say that people invest in art because of snobbery effect, which is related to speakers' consumption. And some people, at least those who have made it to the upper echelons of the economic strata of the society, would invest in artwork because of FOMO, the fear of missing out. And that is called bandwagon effect. Now, these three reasons for people's motivation to investment in art is a question for another day. But what we could scientifically say and establish through our study was that here are the factors that truly matter in explaining art price. Of course, artist's name and artist's reputation matters, but how an auction house or how a consultant is marketing an artwork is a major component to pricing. On the top of that, the physicality and content of the artwork plays a significant role. What is the style? Is it expressionist, impressionist? What is the subject? Is it a portrait? Is it spiritual? Is it religious? Does it have nudity in it? Is it a landscape? Is it an abstract artwork? Is it so all these factors have very significant pricing implication. Then, of course, physical aspects like which medium has been used, what is the nature type of the base, what is the color theme. So these are the factors that we have empirically examined in our models, and all of them are very significant in pricing artwork. So remember, when I'm showing you this graph, this is constrained to our analysis of top 25 artists only. And hence, you will see that the role of artist identity is relatively smaller. So every box that you see here tells you what percent of variation in pricing of artwork is explained by that particular factor. And we find that among these, between these 25 artists, is the physicality of the artwork that is the biggest factor. The area, the size, the medium, the base, and the type of the artwork is the biggest determinant of art price, followed by artist identity, followed by marketing. Which auction house is being used? Is the auction house a good fit with the artist that has to attract a certain kind of an audience? What is the date? Which season has been picked for the transaction, for the auction? And the title of the artwork. Is there a title in the first place? And if there is one, who has given it the title? Is it the artist who has given the title, or is it someone else who has assigned a title to the artwork? All of these have significant impact on pricing. And then, of course, artist attributes. Like, is this particular artwork a representative work of that artist? Is this a primary medium that the artist has been using or the artist is known for? What is the age of the artist at the time of the transaction? Was the artist ever given a Padma Award? Has the artwork been transacted after the artist's death? And how popular the artist is? When we say popularity, it doesn't necessarily have to be positive popularity. If the artist gets controversial, that also often has a positive impact on the artwork. And then subject and style matter as well. So using the data that Aura Art collects and shares with us at IIMA-Ahmedabad, we have been able to extract a lot of very interesting insights. So Aura Art not only collects data, they also annotate each observation subjectively. And they were very cooperative when we were having a dialogue at IIMA-Ahmedabad with them on what kind of annotation, subjective annotation, that we would need for each artwork. And we examined them through our econometric models using data analytics. And here are just some of the insights that we were able to extract. For example, if you compare different media, there is a clear signal on keeping all else equal, which media will fetch a higher price. For example, compared to ink or mixed media, gouache, oil paint for the same subject, same size, and same everything else from the same artist will nearly be double the price. Watercolor sells usually at a slight discount. Pastel sells at the deepest discount. And, we are able to quantify these different aspects of these different components of the artwork pricing. Similarly, style has a major impact. People say that, nothing matters but the artist. That's not true. Artist does matter, but on the top of that, the content of the painting, the style, the quality of the artwork, the workmanship, all of which are being represented through these variables that I'm showing, are very significant determinants of art pricing. Now, you can see that realistic paintings sell at a pretty high price compared to still life. Abstract is actually number two compared to realistic artwork. Similarly, you can compare different subjects. Nudity actually sells at a discount, and mythological and landscape paintings sell at premium. And then, we can compare across different artist attributes as well. So, having access to this data really excites us. And as academics, we want to do something with it. Some of you may wonder, what is the big deal about the index that IIMA-Ahmedabad and Aura Art came together to develop? Because if there is data, shouldn't it be easy just to go ahead and consolidate that data and come up with simple statistics like mean price or median price per time period? Actually, that doesn't work in most illiquid asset classes. So think about this simple example, that in year one, the average price of artwork auctioned were, let's say, $100. And year two, the average price of artwork went up to $120. Now, you as a marginal investor hold one very specific asset which has a constant quality. But when we compare average prices across 2 years of paintings of different qualities, we cannot disentangle two separate effects. So think about it. This difference from $100 to $120 can be because of two factors. First factor is, of course, the change in net demand for the underlying core asset class called modern artwork by Indian artists. That is the number that you are interested in. Because if in general the market is placing 20% more price for this specific asset class, on average, you should be able to apply that 20% increment to your marginal asset that you hold. But remember, your particular asset has very specific qualities. So a large part of this difference in price from 100 to 120 could have simply been because across the two time periods, the quality of the artwork auction were just different. So maybe in the first time period, it was mostly oil work. In the second time period, it was mostly tempera. So how do you disentangle these two factors? So this is what we do through our data analytics. We throw all the data in our model and we extract all the price differences caused by factors beyond the passage of time. And then we are able to flesh out the pure play effect of time in the model. And that is what this index is about. That makes this index more generalizable to almost any marginal asset that broadly belongs to the category of assets that we are analyzing here. So ladies and gentlemen, I am done for my part. I really look forward to further commentary on this topic from Mr. Sethi.
Thanks for the great introduction, Dr. Das, on the index. Just wanted to take a simpler, one more simple example of controlling variables. Size, which is the most logical example that we took, that assuming in the first year all works were sold were, say, 10 square feet, and the second year they were all larger works, 12 square feet, then the index would have, the mean index would have gone up by 20%, but the IAI will not go up at all, it will be flat, because that 20% increase is entirely explained by larger works being sold in the next year. So I think that's the simpler way to explain the difference between our index and the mean or median index. I think the earlier slide is there, the graph slide, the index graph. Hanj. Yes, correct. So what we'll do now is we'll actually understand how the index has changed over the last 20 years. The blue line, you see the solid blue line, and correlate that or map that to various socio-economic events that have occurred within India and outside India, which have influenced asset prices in general in all asset classes and also art, so that you get a better appreciation of the linkages between art values and the rest of the world, and also you understand the method and the madness that while there is broad correlation between all asset classes first, with some periods of negative correlations or low correlations, and then there is obviously the index and other granular data which we already saw explained the logic of the art values inter say each artist. Now you are seeing art versus rest of the world. Two factors here. I think we will discuss primary and secondary market in a slide later. Fundamentally, just to cover it in brief, primary market is when art is selling for the first time from an artist studio to a first time buyer. And the secondary market is like a listed market where the art resells. India, two things happened in 2001-2 that were defining moments for the Indian art market. That auction houses started in India in a significant way. And auctions, besides the private dealer market, is the largest part, the visible part of the secondary market. Added to that, so when an auction starts, you actually get for the first time price discovery of art in a more transparent and open format, because that auction results are published and available vis-a-vis or gallery sale data or private sale data which is not available to a larger audience. That was one very important point. And the second was at the same time, the global liquidity bull run started from 2002-3, which went on to 2008. So these two triggers together, the growth of liquidity around the world and all asset inflation, as well as the secondary market creation of art in India, became the magic potion for a secular bull run, which took the art market nearly 30 times higher in the 5 to 6 year period. And that's exactly reflected in the index. The index, which starts off at 100 in 2001, peaked at 3,358 in 2006. So in that 5 year period, you saw a 33.5 time growth in the art index. And then there was a sharp correction to follow. Now again, correlating it to other macroeconomic developments, 2008 you had the Lehman bust, which triggered a significant financial meltdown, and you would have expected art to lag equity and real estate. So equity fell, then realty fell, and art should have fallen later. So ideally art should have collapsed in 2009, which did happen. The 9 was the bottom of the art market, but the peak was 2006 as I mentioned, and not 2008 or 9. The reason again is very specific to Indian art. We had the art funds that came in that period. So between 2006 and 7, we had 5 or 6 art funds and many other art investment products. The earlier part, the interest in art growing with the secondary market coming in the boom actually encouraged many wealth managers, without the right framework being existing, I would think in hindsight, to jump into the bandwagon and create financial products to participate in the art market. And for an industry which was roughly 1,000 crore that time, which as Ruchir pointed out is now 2,000 crores, you had 250-300 crores raised within a year, which was like 25% of the market cap of art was pumped into just by the art funds, incremental demand. So on the top of a very heightened momentum, you had this top up, and the art funds sort of crowded each other and made a price impact by buying together. And therefore the art peak was 2006 and not 2009. From 2006 to 9, there was a sharp collapse to around 1100, a 67% retracement. And then the art market has consolidated and gravitated upwards when it nearly hit a new high in 2016, which was again around 3,000 plus, 3,200. In the interim, you had the art funds exits and a lot more other changes in the buyer base and expansion of the art industry to sort of create this tactical shift. Now moving to the next period of, let's say, something like COVID, was a very big financial shock. Interestingly, while the equity markets crashed and they recovered quite fast, just within a quarter or so, you saw very limited impact on the art market. The blip in 2000 was very, very limited. And because our data and the index is more skewed towards auctions, and much more auctions started happening that time, including online, and there was very strong demand from ultra HNIs for art around the world, including India, you saw a very resilient art market in that period. So, like within the first wave itself, between the first wave and the second wave of COVID, when the markets were still, after the crash, just consolidating, you had probably the highest auction results coming and 3 Gaitondes selling literally back to back, 35 crores, 32 crores and 38 crores, and then followed up with 40 and 42 crores. Just that one artist, 5 works created more than 250 crore of turnover in a 1 year period. So that was again very interesting that the art market showed huge resilience in this. We have analyzed this in another report, the Art Trends Golden Bird source again, and compared such tactical moments with other world shocks, which is the world wars. And again, very interesting data comes out from that, is that the art has actually hit new highs in both the world wars. Now, this is again very interesting for us to understand the difference in the way we view art as an asset right now and the way the West views it. The West is viewing art as family silver, like gold in a way, which is the most defensive asset in a global collapse. So what happens when there's a financial shock? Let's say a particular country, let's say Greece had a financial stress a few years back. All assets that get derived value from underlying cash flows, whether it's equity, realty, pretty much become zero. Because either you have all the cash flows of that business coming from Greece, or the real estate can't be plucked and moved from Greece to London, so that has no value. Whereas art, a Picasso sitting in a home in Athens can actually be transported to London, Sotheby's, and sold at $100 million still. So art becomes the greatest store of wealth and value, which has an international traded price, a lot like gold is linked to an LME price, devoid of all local considerations. So that was very interesting when we went back and tested during the COVID what may happen and took the World War analogies. We were shocked with the data that the art index hit new highs. And now how do we have the art index globally? Interestingly, you have the Moses art index, which is a simpler construct than the hedonic index, being a resale price method index. And why they could do easily replace resale prices, because a lot of art auctions there and sells quite often in a large bucket. So you can actually simply map the changes in those artwork prices to make the index. And these two professors, a Japanese and a US professor, developed the Moses index in 2001-2 and backtested the auction data for 100 years. So the art index is actually from 1875 and the Dow is from early 1900, I think 1925. And they've done the overlay of the Dow and the art index over 100 years to come up with these correlation differences. Interesting, the Moses art index was acquired by Sotheby's in 2016, which is a great representation of how important that index would have been, because Sotheby's is a 250-year-old institution and the leader in auctions in the world, and it went ahead and bought this fledgling index by these two professors. Again, looking at how the macro shift, why we are increasingly getting more bullish on Indian art now than the past, partly comes out from the US, China and other country examples. 2006 is when we wrote, actually, when we were building the Aura business plan and focus, and I wrote the first article on art global trends. And at that time, US market was 40% of the global art market. Chinese market was 6% of global art market. India was a blip on the world map. It was just sort of like a 0.3% of the global art market, so not even being considered in the trade data. And the global art market was a good $40-45 billion market. And based on the growth of HNIs in China, based on the number of museums that China was creating, based on the new auction houses coming up in China, and you had Poly, Guardian, new auction houses coming, they were also getting listed and their valuations they had hit $1 billion market cap that time. Based on various of these underlying factors, we had predicted that in 10 years, China may beat the US art market, which seemed like a very far shot because it was 40% versus 6%. Mind you, much to our pleasant surprise, within 5 years itself, China hit 30% global trade and US became 29. Why this change happened faster than we expected is thanks again to the Lehman bust when the US market had a hard landing. China was not that impacted, was more insular, and therefore that double swing of China growing and US degrowing helped get this change. But you can imagine, changes like these take decades and centuries to happen, which happened in 5 years. China then had a bit of a soft landing and it's currently back to 20% global trade and US is back to 30%, but it's still a very far cry from a 0.5% global trade that India stands on. As I said, Indian market is 2,000 crore, the global art market is $65 billion, which is like 5 lakh crores. But we see with the new increasing base, again the next slide will help us with that data, the new base of billionaire growth in India will actually propel a lot of this correction of Indian mispricing on the global scene. If I just look at the graph on the right, very simple example of mispricing is 20% of Chinese market share is supported by the fact that China has 20% of global billionaires. I'm just trying to say that the billionaire population in a way holds the art market, taking a very simple proxy. Again, US is very much 1-to-1 with a 42% and 37%. India is very far out in that ratio. We are 1/10 with a 5% global billionaire pool and the fastest growing. We still have only 0.5% of the art market. So that contribution of Indian art market just on this one number of billionaires needs a 10-time correction. So that means the Indian art market can easily grow from 2,000 crore to 20,000 crore only on this one factor. Again, take a similar factor. The recent Hurun report has thrown up that we have 1,100 industrialists, wealth creators above 1,000 crores. My guess is that out of this 1,100, only 25 to 50 would have meaningfully bought art. Imagine if even half of the balance were to allocate meaningful capital towards art in the next 5-10 years, which is even 1% of their wealth. You have a huge number coming to the art market. So many such things, Indian promoters now, the fancy of building hospitals and schools has always been there to get the family legacy. But now it's understood that the family legacy through a museum outlives everything else. And so is the contribution to the Indian art and culture scene. So now we will see a lot more public and private museums coming forward in the next 5-10 years. So everything that happened in China from 2005 to 10 is possible in India from now over the next 5 to 10 years. And therefore you see a large part of that growth coming to the Indian market now. Next please. As Ruchir already took this part of this data, we have the highest painting guide to India at 42 crores. We can skim through this. Next please. But Chinese art is 142 crore. And international art is, next please, 2,941 crores. So even at the headline number itself, we are nearly at that less than 1%, little more than 1% mark. We are at 1.33%, 40 crore over 3,000 crores. So every statistic you see, we have a 10 to 100 time re-rating potential simply on correction of our under positioning, not any new factors. And the new factors still have to play out, which is the increasing wealth creation, which is the increasing interest in art, which is the increasing understanding it's an asset class. And therefore, the index becomes much more relevant to be looked at in this larger scheme of things. The promoter typically intuitively understands the wealth creation potential of art because he has many examples in his social circle of people who've bought that Hussain for $10,000 in 1970, which is today 10 crores probably. But the gatekeepers towards financial allocation, which are the family offices, the wealth managers, etc., I think they are struggling for data points to be able to appreciate the asset class. And you can't rightly so, have an asset class in a large industry without any reference points. And the art index then now becomes a great reference point, which shows the long-term growth rate from 2001 to now at a 17% CAGR, which is very healthy, which beats most other asset classes. And you see, more importantly, the method in the madness, not only of within the individual artists, within the art fraternity, but art versus equity, art versus reality. You see very strong correlations, which then help you understand that it's not an arbit industry. If we scratch the surface and show more interest in going deeper, we will be very satisfied with the outcome of the way the market prices various assets. I think all of this is very helpful to create the next wave of allocation in India, which is bound to happen now. We can go ahead. This is just some photos of we launched the art index on November 24th at the Bombay Stock Exchange. Very excited to have done it there. The BSE listing ring, as you know, is the hallmark for the secondary market, and which was widely reported and covered in the media. We can actually take the next section briefly. Should I introduce a slide and then you want to get into the discussion? Yes, next slide, please. So what we're doing, so we've sort of parked the index discussion now, and we'll come back on questions on that. What we're now trying to just quickly do is set the stage now for what are the constituents of the Indian art market. The most optical constituent is the artist, the most important part, which is in the first part of the graph of the chart. Next is the primary market players, which are again very visible, the galleries, the art shows we are happening here in Nehru Center to Jahangir, to private galleries, to art fairs, to online marketplaces. All these are primary market platforms from where art sells for the first time to a first-time buyer. And then there are, as I said, auction houses and private dealers that control the secondary market. So just taking one example of an artwork which is bought in 1995 by a collector, flipped in 2008, and the second sale happens in 2022. Just you can take an example and we'll discuss the implications later. Just for the sake of dismissing this as an important distraction that came in the last few years, the NFT world, largely NFTs and why they've come and gone, and I'm much happier for that, they were firstly hinged a lot towards digital art, in the first phase at least. We always felt that the NFT market to get deeper has to connect, has to get phygital, which has to connect with the physical art, and then you link it to the NFT world. But even before the NFT world, which again is a lot like the funds coming 10 years before the index, again putting the cart before the horse, we needed a much deeper framework of blockchain implementation in the art world. And that blockchain implementation actually solves a much larger malice of the art industry than we can imagine, which is to do with authenticity and provenance. And that's where we need all our legal friends to come forward and help the industry build that framework. You can imagine a movable asset which has value and which changes hands, like the examples I took, over very long periods of time, 10, 20, 50 years later. It is very difficult then to establish the chain of ownership of changes of the artwork, like you can do in a property registry with a 30-year title search, or you could do with the ROC of change in shareholding. You have no such parallel system in the art world. Add to that the other challenge that Indian art did not attract wealth tax, was not a capital asset under income tax till 2008, creates the magic recipe of disaster where most of the art is lying off the books. Very often acquired in cash 50 years back or 30 years back or even 20 years back. Not necessarily the part of the black money economy. It could have easily been drawings of promoters from their books. But because they never envisaged that this could become so valuable 30 years later, they didn't view it as a capital asset. They were buying a painting, buying a table, buying a chair to decorate their home. They never receipted it, they didn't put in the balance sheet, they were not on the wealth tax, it didn't enter any filing. Which meant that it was kept off the books and continues to be off the books for the largest period of time, till somebody now really bells the cat and corrects this imbalance. And that creates a separate challenge besides the taxation and legal part and succession and other issues on the authenticity part. because the provenance, which I mentioned to you earlier, very important, chain of events of change in shareholding is completely missing in India. And therefore, the advantage of NFT and blockchain at the first level would be to build this digital ledger to be able to trace transactions through voluntary registration of art changes by subsequent collectors in a digital ledger and tagging the art in a manner which is tamper proof, so that that art and the tag that reads to the digital ledger can actually become your registry in the long run.